Good morning, everyone. We will be waiting a little bit until everyone are connected, till everyone is getting ready. It's the start of Thursday morning. Many people are going to the office actually now in London. Thursday, I think, is the busiest day so far, what we see. Specifically, you can see that in the evening with everything booked and people standing outside, which is very, very nice to see. Thank you, everyone who decided to spend this morning with us. We'll give a little bit of time for Alexei to join as well. Before that, I would like to say about today's discussions and topics that we're going to have. The idea of that webinar being because we went into many deep conversations from the technical perspective with our clients, with our competitors, with our partners, with basically everyone who participates in the industry, in the market. The discussions were precisely about the differences, the architecture, and the main reason, if we go looking back, why we decided to do the bridge, first of all, was because we've seen the market need for that. We've been facing and dealing with many, many questions from our clients who've been facing different issues, and we just seen that many of them can be avoided just if you build the bridge differently, if you put some of the preventive measures in the beginning before it actually goes live. So that's why we decided, let's try to do that. Let's see how it will go. Let's solve this issue in the market, in the industry, and came up with the idea to do the bridge in a completely different way. And Alexei will be describing today in the more technical details what are these differences, why we decided to do it in that way, what are the preventive measures that we took to actually help the brokerage companies and help the traders, to help the liquidity providers, in fact, all the market participants, because the trading flow starts from it impacts all the participants. You want your clients to be happy with the execution, with the speed, with the rejection rates, with the approval rates, with the spreads, with everything. You want them to get the best pricing. You want them to be happy. That will make you happy as a brokerage company. You want to see also to analyze which of the liquidity providers are better or worse. And we will be discussing all that. Some of the topics we have prepared. Some of the topics Alexei will be presenting. We prepared some of the information and the brochures about that. But you are always free to ask any questions on the go as well. If you have any questions, there will be a time. If you have clarification questions, just feel free to put these questions on the go at any point of time. Then we'll look into them maybe while we're discussing the topic, or maybe if it is about different topic, we will put it a little bit further away and cover it after the presentation. Let me check. What's happening. Okay, here we have Alexei, the
Hello.
CEO of the company. Hi, Alexei.
Hello.
You are right in time, actually, because I've been just talking about the idea, the reason we had when we started to do the bridge, that it was driven by the market demand, because in the first place, we met a lot of different issues we've been dealing with as a software provider, and we just seen that many things can be prevented on the level of the architecture, on the technical way how we do the bridge. And for the best way is to talk with you, because you are the brain behind the product. You decided the way how it should be, leading the view or the vision of the product. So starting from that, one of the first questions, I think we start then with this broad question about what is this difference from the architectural point of view and the structural point of view that makes our bridge different?
So, like when we developed our trade processor, when we started to develop it, we tried to find the solution to offer like a best performance to our clients and also offer full control for our clients, because many of like our experience of past of software development for all these 11 years of the company, we realized that many clients want to keep the critical parts of the infrastructure inside their system and have a full control of it, because of course it's good when you trust your IT partner, but in case if something goes wrong, you want to have full control of everything and keep in your hands all the solutions which bring your business alive. So, and when we, so that's why we decided like to reinvent a common way to create bridges when they located in a common hubs, when it's all the bridges, all the setups, some located in some centralized system which connected to every broker or liquidity provider. And we decided to create some decentralized system where the bridge could be, every single instance of the bridge could be installed inside the infrastructure of the brokerage company. So what it brings to the broker. So in this case, we have the lowest delay between the bridge and the trading platform, because we don't need to spend latency time while the request will go to the hub and then go to liquidity provider. Because in this case, all the actions which we don't need to send to liquidity provider will be executed in the same place where the trading platform are installed. So in this case, it will raise the speed of the execution, speed of decisions of the bridge, how we should execute certain requests of the client. So it's bring more performance on that side. Of course, keeping bridge near the liquidity provider is also a good approach, but the issue that in case you need to execute something is not related to liquidity provider, because, for example, B-book execution or some kind of internal operations, you don't need to send it somewhere. So it will be like installed near your system. At the same time, some of our clients told us they don't want to really care about this, and they want to just rely on some technology partner and keep everything on that side. So we also offer like a cloud version of our bridge. It's still the separate instance of the bridge, but it's installed in our cloud, and we maintain all the things related to this instance. In this case, the company who ordered this kind of stuff still could ask us for some access to the server to have a full control for everything, but at the same time, we can maintain it in the cloud without any additional issues. So we try to combine both ways and offer the best solution which suits the certain broker requirement at the moment.
Adding to that, I know that it's a very hot topic as well with our clients, that they don't want to take care of the full control of the servers, because it's completely different niche. They need to have separate people, the team. But I know that we did some type of monitoring specifically for the bridge, not only for the bridge, but also for the trading platform. Do you think you can cover that as well? Because it's also about the preventing measures that we are knowing very quickly if something happens, and what type of in a broad picture, what type of the things and how we're looking after the servers.
Yeah, but like we have different types of monitoring system. We have separate system for trade processor, our bridge, and for platform, and our support team immediately will receive any notification about anything which is going wrong, something, for example, if some instability in network connection between trading platform and the bridge, or for example, network connection between liquidity providers and the bridge. In this case, they will be immediately see the issue and will be able to act to route it somehow in another way. So yeah, monitoring system is very helpful in case you want to check. So when our support team work with the cloud-based solution, or even work with the instances installed in the infrastructure of the brokers, they still have access to the event system, which allow them to, in real time, to see the status of all the actions and all the operations. So this means that we could, as IT tech provider, we could react immediately if something goes wrong. But technically, it's in most cases, it even do not go wrong, because stability of our system is like 99.999% success of all time. So as we have it from our statistic. But anyway, even in case of something goes wrong, even with the physical servers, we see it immediately. So it's allow us to control everything.
Okay, thank you. If you wanted to share something, I have opened the function, yes, to share it. Because the next question I had was actually also about the stability, because the stability is the most important, not the function, like the requirement of the brokerage companies. They want these products always be stable. And I know that we can connect that decentralized system actually guarantees or helps to achieve the higher stability. Is that correct assumption?
Yeah, it's correct, because when it comes to the decentralized setup, so every single instance of this specific broker is separated from the infrastructure of other brokerages. So even if there's some kind of issue, even in a data center where all the servers are hosted, it means that every server will be handled separately. So issues in one server is not anyhow related to issues on other servers. So in this case, it means that we offer high stability, because high load on some part of the common hub couldn't influence execution on the specific broker. So in an overall, it's more it's better option, because decentralization is a trend of past years in all spheres of IT. So that's why we decided to do so. Also, we have to say that when it comes to decentralization, we could also install a separate watchdog copy of the trade processor for a brokerage company. So it means even something go wrong with the physical server where the trade processor is installed, we could switch to another trade processor installed in the separate location. Even if all the data centers somewhere go offline and go down, we could immediately switch to another separate instance of the trade processor prepared for this brokerage company and start immediately without changing the infrastructure, etc. So in this case, we have a full control of everything related to the brokerage business, and the brokerage itself have also control of these servers and can keep in his hand all the critical components of his infrastructure. So, and also what we should keep in mind about the centralized setup, that our clients and many brokers are located in different parts of the world. And even if the brokerage company wants to set up the system inside place where they are located, because for example, it could be some small local brokerage company in some country. So it's much easier to install the solution near their trading platform to reduce any latency between that, as Alex already explained previously. In this case, if they don't work much with liquidity providers, but work on with the B-book execution, all other settings, it will be much faster than sending to some hub, sending requests to some hub from the clients.
Okay. Do you have any graphs supporting that? Because it's
So we have it a graph that shows that it could be, it's very simplified, first of all, so it's not really how it looks like, it's very simplified. So technically So it could be like here we see the trade processor installed near the MetaTrader 4, MetaTrader 5, or any other trading platform you use, so, and then it connected to liquidity provider, or it could be located in a cloud and work somewhere and connect on one side to liquidity provider and another side with trading platform. So in this case, you see it's how it works technically. So in one way, it's inside infrastructure of the brokerage company, and the second way, it's outside the infrastructure, depending on the need of the brokerage company.
Thank you. I see that more people joined. I would just like to say that we are focusing today on specifically technical discussions and questions about the bridge, about the setup and functionalities. If you have any questions on the go, feel free to write them on the chat. If they are according to the topic we're discussing, we will cover that question. If it's about something else, we will take it after the topics that we have in plan. So feel free to text any questions you have. From here, I would like to move on more to the functionality of the bridge, and specifically to touch about the smart routing system and how that can complement or outperform the aggregation. Because we know the aggregation in itself can cause some discrepancies and other issues for the brokerage companies.
Yeah, so in our bridge, we have a very useful routing system which allow brokerage company to specify different execution patterns based on many parameters like session time, symbol, countries, volume, order types. It's only like a few of them, and have a range list of options which allow you to configure patterns of the executions. So using these, brokerage companies could set up different execution rules for different types of the clients, orders, and specify not only LPs, how they want to execute, but also markups of the execution, delays, execution, aggregation times, etc. And it could be easily configured for every single client if you need. So you could combine it with the group of the clients, or for specific clients, or only for specific symbols, and etc. So you are free to do whatever you want, and combining it with aggregation modes we have in our trade processor, you receive like a full flexibility on your execution model, because we have like a 5 aggregation models also, which could be used in different ways and depending on the needs of the brokerage companies. So it means that you could like have everything you want in terms of the execution. So all the clients could be routed like all the main clients could use one pattern of the execution, and you could set up specific one for the specific clients, and that's it. And what I want to add, that you could like create some kind of pre-configured patterns, and you could easily switch between them or turn it on or off time by time, depending on the market situation, for example, on a news market or session start or end. So you could set up this, and you could configure the schedule for these changes, or you could do it manually with a few clicks and change the patterns of the execution. So if you have a dealing department in your company, your employees could configure the execution model for different situations on the market, and they have a full control of what they, how they want to execute exactly in this moment. So if something goes different in the market situation and you want to switch to specific conditions, for example, add some kind of markups or send liquidity to another liquidity in the same time, or use another type of the aggregation, you could easily switch it in the same time. And you could configure it all together for example, for all your trading platform in one time. So you don't need to configure it separately for every single platform. You could do this in a command all together. So it's very easy and very flexible.
I have a question about that actually. How did you solve somehow the issue that then the configuration can become very like multi-leveled and complicated to check?
First of all, we have a thing which we call it presets. It's like kind of pre-configured layers, and you could. It's not even when you turn it off, turn it on. So all of them could be turned on the same time, but it's some kind of a groups of actions. So of patterns. I mean, you could divide it logically for you. So, for example, if you have some kind of rules for scalpers and scalper trading clients, you could just create a pattern for the scalper traders, and in the interface of the trade processor, you easily could just select this pattern, and it will show only the rules related to this kind of clients. So you could just manually manage it. Second, we have a special tool which allow you to input details of the like a request. So you could add like a trading account number, you could order type, instrument, and etc. So you could just fill like a form, and after applying it, it will find all the rules which could handle this request. So if you're not sure about how this specific group of clients or these clients will be executed, you easily could add in a search field, you could fill a search form for this, and Trade Processor UI will show you the rules which related to this client or group of clients or type of the order. So yes, because you are right, it could be some kind of, sometimes it could be complicated because many clients have very different types of rules, but we're all the time improving the system in the Trade Processor and trying to do it easier and easier with each new release. Just because we understand that control of the execution is one of the main point for the brokerage companies.
I'm obviously biased, but I think it's super convenient and nice way to do things. I know that there are a few more things in the bridge that are like a small functionality, but they are kind of life-changing. I know, as we have hands-free headphones without the wires, which like if you started to use them, you don't go back afterwards to the wired headphones. So what are the functionalities like this that we have in the bridge that might be small, but they're actually improving the usability of the bridge so much that you only want to use them?
Yeah, we have a plenty of them, so I will touch only like several of its things. So first of all, as I told, it's like profiles, presets, so you could configure behavior of the trade processor for the different situation and immediately switch it between them. So it's very easy and useful for the dealing department. So second, we have a volume consolidation tool, which is mainly used by bigger brokers who have multiple liquidity providers connected at the same time. Because when you work with multiple liquidity providers, you need to manage your equity and manage your position on different liquidity providers, because in different circumstances, like sometimes depending on the market condition, like buy orders could go to one liquidity and sell orders go to another liquidity, and the position on both liquidities will go high. So you need to keep eye on the equity on both liquidities. And our volume consolidation tool is automated tool to control this. So this tool allows you to configure a schedule when the trade processor will analyze the opposite position on different liquidity providers. And depending on settings you set up, it will like close opposite position on different liquidity providers just to lower your position, lower your margin requirements on your liquidity. So which means you don't need to spend more money on equity. So it also lowers your swaps on liquidities because you don't need to pay swaps because your position is lower. So it's also is very useful tool for dealing department who are dealing with positions on liquidities and etc. We have AB risk tool, system and auto switch system for AB risk tool. It's not a small tool, but the big one as well, because with this tool you could easily switch between A book execution and B book execution in real time, even with moving position from A to B book and from B book to A book with a few clicks. So if your dealing department decided to that they need, according to the current market condition, they want to switch some part of the traders or some part of the position to be booked immediately right now, because they understand that will market go in a certain way. So with a few clicks, they could select a group of the clients or group of the traders and send them to B book or to A book immediately on specific instruments, and see how this impact financial result of this action. So is it profitable action was or not, and see what the current condition of this switch to A or to B booking, and they easily could return everything back again with like a few clicks of the mouse. And also we have auto switch tool, which allow to pre-configure some kind of options on which certain clients will automatically will be switched to B book or automatically will be switched back to A book, and this. Of course, we have some. Yeah. You have a question?
We have a question, yes, about the how in case of aggregation with the volume consolidation. You can read the question as well, I think, if you want to read it through. But the question is, in a case of aggregation with the volume consolidation, will the client's trade executed by non-TFB provider executed at the price of this liquidity, or it will be executed at TFB price?
When it comes to aggregation, you mean in terms of volume consolidation, not the execution of the order, yes? So when it comes to volume consolidation, it will be executed on the price of LP. And in volume consolidation, you also even could set up like the maximum gap between two LPs when you want to close opposite positions. So you could set up the maximum like a gap between LPs if they have different prices, and trade processor will analyze it in real time, and if price fit to each other very tiny, then it will execute the volume consolidation feature. So you have a control of that. So of course we don't execute it on our internal prices, but on the liquidity provider prices, of course. So what also we have like a backup LPs, but it's pretty simple. You could set up the backup LP for different clients. And in case of one LP is something wrong on that, and the execution is not possible for some reason, so the execution will go to another LP. So we have a continuous execution feature, but I think it will be very hard to explain in few words what it is, but it's a system which helps you to do all the kind of tasks related to execution on LPs, but not related to traders' orders. So let's imagine, for example, for volume consolidation, you want to close opposite position for some very high amount of volume, because during the day the volume was trading volume was very high, and you have high opposite volume on two LPs. It's obvious that sending one single order with this big volume will give you a very bad price of the execution, because the market depth sometimes not very good, and if you hit the market with the very big order, it means that you will get not so good prices you see at the top of the market. So continuous execution is a system inside the processor which able to split every single order into the parts and execute it continuously one by one with a small amount of volume, which means that you will not hit the market with one big order, but you will cut market with the smaller orders one by one immediately. Because if you look on the real exchanges and the market depths, you will see, so when you hit the top of the market with small volume, in most cases, when the market is stable, it will be immediately there should be an offer for this volume again very shortly, because other players on the market will put volume on this price as well. So this continuous execution feature allows you to get much better pricing when it comes about execution of the big volumes for things like volume consolidation, or for example, A/B risk tool, when you need to move position from A book to B book, so you need to close it on A. Continuous execution help you to get better pricing. So this is kind of a small features we have inside, which helps you in a daily routing procedures of the brokerage companies.
Thank you. And I see in the list you have a backup liquidity provider as well. You want to comment on that?
I already touched it a little, but it's very simple, and it's used by, we have it in all kind of the bridges. So it's like just a backup system. When something goes wrong with one liquidity provider, the trade processor could understand it immediately and send orders to another liquidity provider for execution, just to avoid interruption of the trading of the clients. So that's pretty easy. It's something that we should have, not like a feature, but as default thing in the in any bridge. So yeah.
So touching more the topic of the big clients, traders, and the traders who are trading with the higher volumes as well. One of the important, or maybe the change on the industry that we've seen lately, or especially within us, the more intense usage of the fixed API. Yes, exactly.
Yeah.
How did we do the fixed API connection? Is there anything different about our fixed API works, and just in general, more details about the fixed API trading and the platform?
Yeah, so first of all, we should start that a fixed API is not something, so it's more about the technical way of communication, but not about the business logic, because different clients and different bridge providers could, when they say fixed API, could mean different things. So in our trade processor, we have like three types of the fixed API inside of the bridge, which developed for different purposes. So first fixed API type of connection we have, we call it external fixed API connection, and it's developed to connect separate trading platform to the trade processor. So in case that you don't work with MT4, MT5, cTrader or some other platforms, or you have in-house trading platform, you could use this external API to connect your trading platform to trade processor, which allows you to send all the details regarding the client requests, like trader's account number, group account of the account, country, and all other details, which mean that you could use all the smart routing we already discussed previously, even if this platform is not natively connected to the trade processor. So this is tool to connect in-house platform to. Second types of fixed API we have, it's a fixed API with a MT5 account synchronization. So it's kind of coverage on MT5. So it works like this. So it's accept all the requests via fixed API and execute it on the margin engine on MT5. So if the brokerage company want to give some of his big clients access to the MT5 account, not only via trading terminal of MT5, but also with an API connection, fixed API connection to receive quotes and execute orders, they could configure this kind of fixed API inside trade processor, and all the requests and all the execution handling of this fixed session of this type of fixed API will go through the MT5. So it's it's useful for brokerage companies who just want to a large amount of trading possibilities for his bigger clients, professional traders, because not every client want to trade, especially when it comes to automated trading and trading systems. Sometimes the options of MT4 expert advisors a little bit limited, and they prefer to use a fixed API connection instead of this. And the third and the biggest one we have, it's fixed API platform with a built-in margin engine. So this is like some small part of the trading system inside the trade processor. It's allow you to create to work like with a common trading platform. You could create accounts, you could create symbol instruments, you could manage margin options, you could create leverages for the traders, you could set up swaps values and etc. So all the actions which will be executed on the fixed connections related to this fixed API type will be executed inside trade processor on its own margin engine. So it will take care about balances of the clients, equity, margin positions, and you will see all the statistics related to all the orders, deals, executions, and all. That's it. So in most cases, it's used by the brokerage companies who want to distribute their own liquidity to other smaller brokerage company or some kind of sub brokerage companies in their group, or they have hedge funds as their clients who want to receive, who want to trade not in the trading platform, but have direct access to the core engine and to liquidity providers. So all these types of needs could be covered by the fixed API with the built-in margin engine. And that's why bigger brokers usually ask for this kind of tool, because in most cases they have some kind of a smaller brokerage companies or professional clients who want direct access to the trading engine without separate trading platform.
Is there any difference or benefits of using, because they can use for such cases, they can use our margin engine, or they can use the MT5, for example, or their own platform to have. Is there any benefit of using margin engine straight away without the intermediate?
Yeah, like it's all about performances, execution of the speed, because margin engine, which built inside of the trade processor, it's a part of the trade processor, and it could execute orders immediately without additional chain. Because when you communicate, for example, with MT4 or MT5, you still need to accept the request by MT4, MT5, handle it inside, and only then it will come to trade processor for further execution. So it means that we have additional part in the chain of the models which involved in the execution of the trader's request. So when you use the margin engine inside, you even don't need another trading platform for these proposals. So all the requests will accepted by the trade processor, handle it in terms of margin, free margin positions, and etc., balances, equity, and then it will be directly sent to execution model of the trade processor inside. So there is no any network latency, because even if you have a trade processor installed like very close or cross-connected server with a trading platform, it's still like it's very, very small, but it's still network latency, because we need to send data to the network interface and accept it on the other server and execute it. But when it's all together in one system, it's much faster, and you don't need to rely on third-party software, because you still need to develop some kind of connection for your traders. If you have built a platform, it's not mean that you have a fixed connection, because when it comes to liquidity distribution, you need to offer a fixed or fast protocol, because it's like a standard in the industry, and it's it. So you don't need to take care of all this headache. You just use a solution, we prepare it, and you could cover all the kinds of liquidity distribution from brokerage side if you need.
And for those connection, is the same routing that you touched in the beginning of the of the webinar, will they be still available for them as well?
Yeah, exactly. So this even all this routing could be configured for the fixed platform accounts as well. So you have the same, you have account numbers, you have groups, other details, and you could use smart routing to execute different accounts on this fixed API platform, which means different fixed sessions in different way, and way whatever you want. So it could be like, again, it could be patterns, you could switch between them, or you could set up some automatic schedule which will switch details of how it works. You could even create different quote streams for different fixed sessions. So you could generate quote streams different for different clients, because, for example, in trading, commonly used trading platform like MT4, MT5, we have only one data stream for every client. We only could set like a kind of markups for the groups of the clients, but not could change it dramatically. So in our fixed API platform and trade processor, you could configure stream totally different. When I say totally different, I mean that, for example, one client of the fixed API connection could receive quotes, for example, aggregated from LP1 and LP2, and another client of the fixed API platform could receive quotes aggregated from LP3 and LP4, and then all the requests will be also sent to different LPs. So you don't need even to think about how you should split the execution of different clients, because it could be totally configured different. You don't need to avoid limitation like we have in MT4 and MT5 in this case.
I see that it can be also different type of instruments then connected. So you can have multiple fixed API accounts and link them with the different instruments. And
yeah, exactly. So like, so you have a full flexibility. When you create a fixed session and a fixed account on this inside this platform, you could easily configure the data stream and execution patterns. And when I say data stream, it's also could be totally different instruments. You don't need to work with it like this. So you could stream whatever you want. You could prepare data stream of only like with one instrument, or 10 or 9 or 100 or 1000, and offer it to one client or to all clients. That's it. So it's all under your control. You don't need to you just need to understand what you need and what your client asks from you, and you just configure it for him without any limitations in this case.
And what type of the instruments are supported at the moment by the margin engine and by the bridge?
By the margin engine, we support all the forex instruments, CFDs for different types of instruments, equity, stock. We support crypto CFDs, we support crypto stock, we support crypto futures. We're now working to add deliverable futures into the stock futures. I mean, for the trade processor, and also stock equities as well. And we always work with new instruments all the time, because it's currently brokerage companies could not only offer FX trading, because they need to enlarge the portfolio of the instruments. So we work more and more with that. But anyway, it's depend on the request of the brokerage companies, because most of them still trade on FX and the CFDs and the crypto. So it's in most cases it's covered by, because real stock equities, it's a little bit more complicated, not only from technical point of view, but also with the clearance from the licenses point of view, and etc. So, but anyway, we are working on it right now and going to release it very shortly.
Okay. And now we have a little bit more time left. I will ask you additional.
One more thing I want to add about the instruments. So when it comes to different types of instruments, you should also keep in mind limitation of your trading platform, because even if our trade processors support different instruments, like for example, spot crypto, sometimes it will be very difficult to put it in a specific trading platform. For example, when it comes to MetaTrader 4, which was developed so many years ago when nobody even thought about cryptos. So internally, this platform are not very suitable for crypto because they have some limitation of the precision of the volume of the trades and etc., which is not very compatible with crypto. Of course, you could offer crypto with this trading platform because it's very flexible, but it will be much easier, for example, to go with the MT5 because there will be some issues with MT4 related to these minor things. And if you want to offer better experience for your clients, you should also think about a good trading platform when you decide to use specific instruments on your site. Not only think about the bridge, but your platform as well, because you could not, even if your bridge support these instruments, you need your trading platform to have support on this instrument as well.
Okay, lately in the news, not only us, but other companies, brokerage companies and other bridge providers, they've been adding the synthetic FX, and we added lately synthetic indexes as well. So can you tell everyone more about how then synthetic instruments are working? What are they and who is using them?
Yeah, so it's one of the new features we developed in our trade processor. We have synthetic instruments and synthetic indexes. It's similar by its nature, but different, but how it's like calculated. Synthetic symbols, it's a thing when you could like to mix, if you have two trading pairs, for example, you could mix it to get another trading pair. For example, if you have some kind of very rare currency pair, for example, I don't know, United States dollars with some, I don't know, Turkish lira, for example, let's say, yes, and you want to, and in the same time you have like USD to, I don't know, like Chinese yuan, and using this tool, you could like mix these pairs and get Chinese yuan to Turkish lira currency pair, which will be cross-calculated according to the rate of USD between these two pairs. So it's allow you to offer clients these kind of things, which and enlarge your portfolio, especially if you are a local brokerage company and you want to offer more pairs, more pairs with your local currency. And on the overall market, your currency is not well represented with different, in connection with different other currencies. This tool is very helpful for you because you could create amount of currencies linked with your local currency, for example. When it comes to synthetic indexes, it's very similar to indexes we all know, like S&P 500 and others. So you just take different instruments, decide a formula how you want to combine it somehow, and then you get an index which based on different instruments. Let's say you want to create index of top 10 crypto pairs. So you just select top 10 cryptos, you decide what weight every crypto should have in the final formula, and you will get some kind of index related to all these top 10 crypto. So, and if one of crypto goes up and down, index will be changed accordingly to your formula and also go up and down. So like other indexes work, like top 10 industry companies in some areas, so you could create indexes whatever you want. Also, it gives you opportunity to enlarge your portfolio because as we already discussed, offering only fixed and CFDs is not enough currently, and brokers try to find a way to enlarge their instruments portfolio to offer more interesting things to the traders. So these tools help you to enlarge your portfolio, even if you don't have liquidity providers for this kind of the instruments, because you could generate it inside Trade Processor.
Yeah, talking about the different changes in the market and industry, not only instruments now, but we see that many brokers contacting us as well to connect additional platforms to the existing setups. What are the current platforms that are connected already to the bridge that we have? And is there any plans to add more platforms to the bridge?
So of course we have connected MT4 and MT5 native platforms, so with their own API. We also have connection to the cTrader platform, and currently we work with the cTrader to implement cTrader hub to the Trade Processor. And as I told previously, we have a special fixed API connection which allow you to connect any kind of trading platform to the Trade Processor very easy. Because, for example, if you look on example with the cTrader, as they told, they will develop it on their own, and using our API, they told they need only like 1 week to integrate cTrader with the Trade Processor. So it's pretty easy, and it will be the same if you will go with any other platform. So it's of course depend on requests of the brokerage companies, and we're going to add all the popular platforms on the market one by one. But anyway, if any brokerage company wants to add specific platform, they always could come to us and ask, okay, guys, I have this platform already in my infrastructure, how we could integrate it with the Trade Processor. And in my opinion, we could very easily add it in like 1-2 weeks, and that's it. Because we already prepared a lot of stuff inside Trade Processor to communicate with any kind of trading platform. So that's why. It's not an issue for a brokerage company, even if they have in-house created trading platforms. So they could easily connect to a Trade Processor in addition to their MT4, MT5 if they have it as well.
And on top of that, because we definitely see the market for the last 10 years, 5 years more actively, and now with every year more intensively moving towards the more regulated market, more regulated industries. Is there anything that is supporting the regulatory reports?
You know, regulatory reporting is very very wide area in the industry, and as IT company, we decided not to go this hard pass by ourselves again, because many companies already passed it. And what we decided to have a partnership and to communicate with the industry leaders of the regulatory reporting. And our Trade Processor is compatible with MapFintech technology for regulatory reporting. So they will be able to collect all the data from the Trade Processor and create all the kind of regulatory reporting for any brokerage needs. So in this, it means that you, as a brokerage company, especially big brokerage company who rely on the reporting, you don't need to think how like TFB work with that, because you will still work with the leader of the industry in regulatory reporting, MapFintech. So that's it.
Thank you, Alexei.
I think, yeah, we have out of time, but
we are, yes, right on time, actually. If anyone has questions, please type them in. We will cover those questions. I think I will just quickly summarize and maybe do the highlights that we discussed. That we have one of the attendees raise their hand. I need to sort out how to do this. Yes. Please, we are listening to the question.
Hello, do you hear me?
Yes, we do.
Oh, right. I just found that the chart is disabled. You said that we need to ask some questions. Chart is disabled.
Okay.
Right. Anyway, thank you for the presentation. It was very interesting. And I would like to ask if we can see that presentation. Would it be able to send this presentation to email? Right. Yeah. That
Yeah,
was
the
my
recording of the presentation. Yes.
Yeah.
Yes.
Thanks. That
Yeah.
was my question. Thank you.
Thank you for the feedback. It's good always to know
Yeah,
that.
guys. Are you still there? So yeah, I need to say that you're one of the best, and I love you very much. We're
Thank you so
working
much.
with you 1 year or so, and everything is known that we need to compare it to your service, to different partners what we have. So you're the best. We love you very much. So press hands.
Thank you so much.
you.
Thank you so much.
I will be smiling now till the end of the month, I guess.
Okay.
Yeah, thank you for you to coming and saying this, because yeah, it's very impressive. Yeah.
Thank you.
Thank you. Yeah,
Okay,
we will
I think,
definitely
yeah.
as be sending the video, the recording. There is, if anyone was like, we have a chat, and then next to it should be a Q&A, so the questions can be asked in the like one more chat Q&A part. With a summary, it's like it's all different parts. We try to be more technical, not more like a business and just the benefits, but actually how things works inside with the margin engine, with the fixed API connection, with the smart routing system, and with other tools that we have. We have also the special team success managers who, if you are one of those who is using our bridge, for example, and haven't heard of some functionalities somehow, because we're constantly adding new functions, you can contact the success manager that you have, and they will be guiding you through the new functions that we have or new possibilities, or the sales team to do the presentation like from the beginning with all the in-depth look into the functionalities and opportunities. Alexei, do you want to add anything?
I just want to thank every participants, and thank you for coming, for your time. And I hope if you will have any questions, just contact our team, as already Albina told. So, and wish you a great day.
Yeah. Thank you, everyone. We will be contacting you with a video soon.
Okay, thank you so much. Bye-bye.
Thank you. Bye.